Hi, good morning. It's Ross McInnes from Australian Investment Research Services. Hope you're well and thanks for joining us. Last week, global financial markets stabilised as we forecast. The week before, we saw some very heavy capitulation type selling across global equity markets and in the Australian dollar. The Australian ASX 200 index got down to 4175, new 10-month lows, and which represented a 15% fall from the 5,000 level it reached in April, which was basically where it got to pre-Lehman's. So it was had corrected all the way back that 18-month of sell-off and then fell away again. The drivers for the sell-off over the last month have been the focus on Europe and the fact that Greece has basically failed and need to be bailed out by the rest of the EU and the IMF, which has created concerns now that the rest of Europe has had to tighten its fiscal policy, that Europe may be headed for a second recession. And that continues to be the focus this week. On Friday night, we saw the Spanish get downgraded by Fitch, which is the third of the rating agencies, down from AA plus to AA. In the bigger picture, not such a big deal, but they're concerned, as per the analysis would suggest, that Europe's going to grow very slowly, and therefore there is some risk to their capacity to pay debt back, and the interest payments is going to put their government under increasing pressure. This reversed some of the gains we saw on Thursday night on Wall Street, and noting that the US is on holidays today, so we did see some profit taking. S&P 500 fell back 0.9%, but it did close above 1,080, which was our pivot point from last week. Noting the S&P 500 did get all the way down to 1,040, which was a 6-month low mid last week. The Australian dollar, same sort of price action as we've seen the last 2 years, following the S&P 500 around reasonably closely. Got down to 80.60 on Tuesday night, but again, RBA was suggested to be in and around that, as it was the previous Friday. And the market rallied, Aussie dollar rallied into the weekly close and got up as high as 85.50 during Friday's trading. But on the Spanish downgrade and the reaction again by markets, it closed the week at 84.50, where it is this morning. So looking ahead, we've got a pretty big week for Australian markets. A run of major economic data, which starts this morning with company profits, inventories, balance of payments, and then follows through the RBA board meeting tomorrow and retail sales tomorrow as well. And the biggest number for the week, March quarter GDP, although it's a little bit historical given the resource tax quagmire that we got ourselves into over the last 6 weeks and the European problems, still be a focus. Markets looking for 0.6%, and with annual growth falling back a touch to 2.6%. So interesting week, which is which peaks with US payrolls on Friday night. They're looking to be up 500,000, which would be about a 4-year high in growth, and it'll be driven by will be driven by census jobs in the States over the period of May. But it's probably likely to show that private sector employment still much stronger than it was 9 months ago, when we were still getting falls of 300,000 to 400,000 a month. We're looking for private sector component of the payrolls number to be up 300,000. So again, this week we've been looking for medium-term value on any major dip, but at this point the volatility still remains very high, and you have to be focused on that fact if you take any positions at this point. So thanks for your time, and we'll speak tonight. Bye bye.